Hello everybody, it's Yashar here, back again with another video, and in this video I will cover Aritzia earnings report which released only a few hours ago. I will also update my valuation of Aritzia Stock with the new discounted cash flow calculator and the new financial data we received today from earnings report. There's a lot to cover today, so let's jump right into this. To just provide the context, Aritzia is the largest holding in our combined stocks portfolio. I personally have over 200 shares of Aritzia in my TFSA, and my wife also holds 135 shares in her own TFSA. And we have almost $14,000 invested in this company. In my opinion, Aritzia is a fast-growing quality business with top-of-the-line business metrics in growth, profitability, brand quality, and value creation for shareholders. They increased their revenue by more than 100% in the last 3 years. That's more than 35% year-over-year top-line growth in their business. Similar to revenue, their bottom line adjusted diluted earnings per share also increased by more than 100% in the last 3 years. They reinvested their free cash flow into their own business and increased their number of physical stores consistently in the last several years. Their average return on equity and return on invested capital in the last 5 years was 24% and 14% respectively, which demonstrate the quality of their business and how profitable it is. The gross profit margin was relatively constant at around 40% in the last couple of years, and they actually started to buying back shares of the company recently to returning value to the shareholders. In addition, Aritzia has brand recognition and brand value, which is an important factor when evaluating a business. They know their customers pretty well and was able to connect to their customers who are mostly young women, business women, and teenage girls and make them loyal fans and supporters of their brand. The company currently operates over 110 boutiques in US and Canada, and it is growing at a rapid pace, particularly in the United States by opening almost 8 new boutiques every single year. While they are also growing their e-commerce business pretty fast, and this is basically why I invested in Aritzia as our largest position. The company released its new earnings report today. While everybody was concerned about consumer spending on semi-luxury items like Aritzia clothing products, and also a lot of investors were worried about the inventory of Aritzia. I think Aritzia reported great numbers in this quarter overall, but there are some concerns about the numbers in the reports that I will talk about that in the next couple of minutes. So, the most important figures. Net revenue increased 43.5% year over year with a sales growth of 32% compared to the last year. United States net revenue increased 55% year over year. Retail net revenue increased 38% year over year. E-commerce net revenue increased 50% year over year. These are all amazing growth numbers that Aritzia continued to post quarter after quarter and year after year. Particularly, I'm impressed with their e-commerce growth rate at 50% year over year, which is absolutely amazing. And this is a high margin section of their business, which can generate a lot of profit for the company over the long term. Next, gross profit margin decreased 240 basis points to 38% from 40.4%. They mentioned the 240 basis point decrease in gross profit margin was primarily driven by additional warehousing costs related to inventory management, ongoing inflationary pressures, normalized markdowns, and foreign exchange headwinds. They expect that profit margin decrease again in 2024, which is not really great. And furthermore, the administrative costs of the company was up again in this quarter. This margin compression is not good at all, and I don't like it, but I'm not really concerned as most of these factors that basically lead to margin compression are short-term effects, and eventually the company will be able to increase their profit margin again. Okay, let's continue with the numbers. Net income increased 9.1% year over year. Adjusted EBITDA increased 19.7% year over year. And finally, adjusted net income per diluted shares is 40 cents per share compared to 34 cents per share in Q4 of 2022, which represent a 17% increase year over year. These numbers are amazing. Basically, other than the margin compression, everything else is great. In addition to this, their inventory, which is really huge at the moment, started to decline, which is a good sign. The only negative parts of this report were basically a slight margin compression and also reduction of their cash position due to building new warehouses and opening new boutiques. Overall, this report was definitely a good report. It wasn't the best earnings report of Aritzia due to that margin compression and their large inventory, but they are still on track with their fast growth in various segments of their business. Now let's use the updated financial information from this report and plug them into my new discounted cash flow calculator and find the fair value of the stock. To start building the model, I imported a series of general parameters from Aritzia earnings report, like the current share price, their revenue, their number of shares, their net debt, which is the short-term and long-term liabilities minus their cash on hand or cash equivalents, and also their net income per share. I also put my expected rate of return to be 15% for this stock to give myself a little bit of margin of safety due to the risks of Aritzia. Now, in this model, I will calculate the fair value of the stock by projecting their future earnings and then discount the terminal value and future cash flows minus the liabilities of the company back into the present value of the stock based on 3 different scenarios. In the bear case, or the most negative case for the stock, the business will have a little bit of margin compression. I consider them to have almost 12% share-based compensation to reward executives and employees during this time. And they will be able to grow their revenue by 14% in the short term, 10% in the mid-term, and eventually by only 6% in the long term. And I consider the terminal multiple of 14, which is in agreement with historical bear periods of this stock. For a base case or normal case, I considered a little bit better margins in line with their historical average, a little bit better revenue growth, and also lower amount of share dilution, and a terminal multiple of 18, which is historically an average multiple for this stock. Finally, in the bull case or best possible outcome, I consider them to have a little bit better profit margin. They have profit margin expansion. They will have only 6% share-based compensation, a 25% short-term, 20% mid-term, and 15% long-term growth, and a terminal multiple of 22, which is a bull multiple for this company. Now, if I hit calculate, the software will give me some valuable information about this stock based on my assumptions. It gives you the intrinsic value of the stock in each scenario, and then it will provide you with a fair value estimate, which is for Aritzia around $51 per share. It's $51.95 per share. And compared to the current share price, Aritzia trades at 20% discount today. It is a buy according to the model. There you are, guys. I hope you enjoyed the video. And if you enjoyed the video, consider subscribing channel to see similar videos. I will come back with the earnings report of EQ Bank soon. But until that time, I see you guys in the next video. Farewell.